Welcome back, everyone. Now that you've had some time to reflect, we're going to dive into some basic bookkeeping fundamentals. Let's start with some bookkeeping basics and learn just how bookkeepers record transactions. So when you get paid for sales or services that you provide, you make business income, also known as revenue. When you pay for any purchases for your business, those are business expenses. Your business income minus your business expenses is how much net profit or net loss that you make. In any accounting software, data entry happens when a business transaction occurs. You may have heard of the term cash flow before. Cash flow is literally what it sounds like. It is money that is flowing into or out of your business. When bookkeepers use accounting software, we're analyzing each transaction as they occur, and we're making a decision about how to categorize that transaction. I'm going to explain more on that later. But for now, it's important to understand that in its most basic form, accounting is the recording of cash flowing into or out of your business, most often in the form of income coming in when you get paid by a customer or expenses going out when you pay for things for your business. So what might be considered a business expense? Well, here's a short list of the most common business expenses. If you're unsure if something is a business expense or not, please check with your tax preparer. A few things to note here. Office supplies can include more than just pens and paper. Your website subscription, other computer or software costs, and such can be categorized under office expenses. You can also expense shipping and postage. Other expenses include job supplies, which are supplies that you need to perform your job or make your product, business insurance, which we should all definitely have, maintenance and repairs, especially if you have a brick and mortar, legal fees and professional fees, and this could also include any membership fees to professional organizations, advertising, which we all know a lot about, accounting, of course, any independent contractors that you hire, and it's always important to remember if you pay that independent contractor $600 or more for the calendar year, then you want to issue them a 1099. Also, payroll expenses as well as employee wages are common business expenses. Vehicle expenses, phone, utility, rent or mortgage, and lastly, meals. Now, this is a tricky one. It's important to remember that meals means those purchased at cafes or restaurants when business is being conducted. An example of this would be meeting at a cafe to go over your bookkeeping with your accountant or taking a client out to dinner. There are some additional business expenses not listed here that you may be able to take, so you always want to check with your accountant or tax preparer to see what other expenses might pertain to your particular industry. Now I want to switch gears here for a moment and talk about some accounting principles. You may have heard of GAAP before. It stands for the Generally Accepted Accounting Principles. It's a common set of principles that we all adhere to in the accounting and bookkeeping world. Within this is the basic accounting equation. It's represented here as assets equals liabilities plus owner's equity. Assets are things like cash, your accounts receivable, and any fixed assets of your business. Liabilities are your accounts payable, any business loans you have, and business debts. Owner's equity is generally the equity you have in your business, but it's expressed here, it's made up of owner's contributions minus your owner's distributions plus revenue minus expenses. Now, since liabilities are simply business debt that you have, I want you to remember equations from back in high school, because another way to think of this equation is that your assets minus your liabilities equals the amount of equity that you have in your business. Let's also talk for a moment about the difference between cash basis and accrual basis accounting, because when you set up QuickBooks, you'll have to decide which one your business operates under. Cash basis means that you record income when you receive it and you record expenses when you pay them. Accrual means that income gets recorded when the invoice gets sent to the customer. Expenses get recorded when the bill is received, not when the bill is actually paid. So accrual normally deals with accounts receivable and accounts payable. Now, this is one more important factor before we jump into how to do your own bookkeeping in QuickBooks, and it has to do with your bank accounts. It is super important to separate your personal spending from your business and to have separate bank accounts, those for your business and those for your personal use. And once they are separated, get into the habit of only using your business bank accounts for business income and business purchases. Although the IRS does not require that you have separate bank accounts, separating your accounts is the best business practice, which will make bookkeeping way easier and will ensure that you are properly categorizing those transactions. If you do not want to open a business bank account, you can simply open a separate personal bank account that you only use to deposit money from customers and pay for business purchases. Here's an example of some common business accounts you might have. Now, you may be wondering how to pay yourself as an owner of your business if you have business banking accounts. And the answer is pretty simple. If you do have business banking accounts and you are either a sole proprietorship or a single member LLC, all you have to do is just take money from the business account and put it into your personal account. And you can do that in a few different ways. One way is you can do a bank transfer. You can also set up an automatic bank transfer to happen on a reoccurring basis. Or you can write yourself a check from the business account to your personal account. Or you can even go to the ATM and just take out a withdrawal. And what you want to do is in that memo line, you want to write owner pay or owner payout. You can also use the term owner draw if you want. It all kind of means the same thing. So go ahead and do that, and then you're all set to go. You want to make sure that on the QuickBooks end of things, it also gets recorded on the books in the QuickBooks system. Lastly, before we dive into the QuickBooks demo, I want to talk about what chart of accounts are. Your chart of accounts is really the heart of your bookkeeping systems. When you use bookkeeping software, this is the list of accounts that all your transactions get categorized into. When you set up QuickBooks Online, one of the first things you're going to do is make sure your chart of accounts is set up correctly and the account types that you're going to categorize transactions to are in line with the type of business you have and will fit your needs for organizing your income and expenses into neat little drawers in your virtual filing cabinet. Go back to the accounting formula that I showed you before if you need to, and you'll see that the chart of accounts are organized into those main categories. Asset accounts will consist of business assets like inventory, a work vehicle, or expensive work equipment, like a $3,000 3D laser printer that you use for your business. Typically, these are fixed assets that are depreciable, so if you have anything like that, you'll want to get some help from your accountant when setting those up in QuickBooks. Liabilities would be things like loans or other business debt that you have. Owner contributions and owner distributions would be classified as equity accounts under the type of accounts, which I'll get to later when I show you how to get things set up in QuickBooks. An owner contribution is when you're investing money in your own business. It's not counted as income. As we described before, an owner distribution is when you're taking money out of your business, like when you're doing a payout. There are two other main account types that will be listed in your chart of accounts, and that is the income and the expenses. You can have just one income account called sales income, or if you have multiple types of services you offer or goods you sell, you may want to set up several income accounts. For example, if you're an author who gets paid for public speaking events, you may want to have one income account called book sales and another income account called public speaking services. For income and expenses, you can also have sub-accounts set up in the chart of accounts. For example, if you're an artist that paints portraits of dogs, cats, and people, you could have 3 different sub-accounts. You would have a main account called portrait services, and then you would have one called dog services, cat services, and people services. Or you could also call it dog portraits, cat portraits. And so you'll set that up, and that way if somebody, for example, pays you for a painting of a dog, then you would go into QuickBooks, you would record that under dog portraits, and then when you did your profit and loss statement for your financial reporting, you would be able to see what portion of your income came from doing portraits of dogs versus portraits of cats and portraits of people. So you could really start to see where you were earning more income and what your most popular services were. And you can also do the same thing for expense accounts. So for example, you could have a main expense account called office supply expenses, and then you could have sub-accounts called computer and software expenses, and one called postage and shipping. That way you're really able to set a budget and see where you're spending the most money. So now that you know a lot of bookkeeping basics, please meet me in the next video and we're going to be able to take a test drive of the QuickBooks system. I'll see you there.